everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market outlook for tomorrow's trading. It's going to be 6/7 of 17. We are looking to create a trading plan, an attack plan for tomorrow's trading with what the market information we have today. Now, in terms of the information that the market is giving us today, well, it's another slow, grindy one, that's for sure. Crude oil had a nice little breakaway move after noon, but before then, it was pretty painful in terms of the movement today. Sat around waiting for a good setup, and well, we really didn't get many to work with. And well, the important part on a day like this is patience. Now, when it comes to everything that's going on, one big thing that obviously stands out, it seems like every single day we're hearing more news about a lockdown here and an evacuation here and a shooting here, and it seems like it's coming every single day, and it is causing a little bit of not necessarily turmoil. We're not seeing the markets collapse or anything, but we are seeing them stall. Nobody really trusts staying in them long enough to get some good consistent movement, it seems. And well, that leaves us with the market that we see today. Now, before we jump on in, as always, make sure to swing on over to the website, slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to allow you to sign up with your email address so we can email you every time one of these videos comes out. Along with that, we talk about all kinds of other stuff in the newsletter, from stocks to dividends to different statistics, cryptocurrencies with Bitcoin going through the roof, all kinds of stuff. A great newsletter to get your hands on. At the bottom of the page, every single day, we have two different posts. We have the market psychology video or a video that goes over a trade that we took that day in the room, just kind of covering the basics of what we're doing, and just a generally good video if you're looking for a way to kind of read the markets in a different way. Also, along with that, every morning we have a live Trader Morning Prep where we post all of the major levels of support and resistance for the big four markets that we trade, and that's going to cover all of the major potential turning points that we're looking for that day. So another place to grab some pretty solid levels. If you haven't done so already, make sure to grab the live Trade Room subscription and trial info. From there, you can sign up for a one-day trial. You can sit with us in the room, see what it's all about, and well, lately there hasn't been a whole lot going on, but you know, we take the setups when they come, and well, if they don't come, then we end up doing a lot of training questions and hanging out with members. But overall, the live Trade Room subscription is a great way to see what we're all about and sit down with us in the room and see if it is a good fit for you. Of course, if you do enjoy it, you can sign up for a monthly or a weekly subscription, and if you join as a full-fledged VIP member, you get the full package of the Trade Room as part of it. Now, starting off with the euro here, the euro, for the most part, is bullish, kind of, right? The overall movement started off kind of in the middle. We had a new low, double bottom low, into a big new high, secondary push into a new high, and then basically take this and then invert it down here, right? The exact same thing. Big push down, secondary low, and it rockets right back up. So big rejections off of both sides of the market here, and now we're back towards the highs. So essentially we've cycled from high to low, back to high. The anticipation is that this is going to cycle back down to the lows again. The big thing that we're really kind of looking for here is that potential kind of double press, and that's what we have right here. We have a double press, and that's the exact same thing that happened on the bottom, the same thing that happened on the top, and now is potentially happening again. And a lot of sellers are going to be picking up on this, looking for a reason to sell back down to new lows. Now, in the way of that, we do have some buying opportunities. If the market does want to, you know, kind of break out and continue to the upside, we have major support at 12,695, 635 to 640 in that area, and then at 12,565. Lots of major support levels underneath us that could potentially hold the market up. But if it goes fast, like we saw here and like we saw here, may not make much of a difference. So these are the levels that we have to be careful of, but overall, looking to sell off of these highs with a rinse and repeat pattern 3 times now, looking for a dive back down to a new low here on the euro. Over on the gold market, gold was an absolute rocket ship today. Just didn't stop going higher until, of course, the U.S. session. When the U.S. session started, it's like they hit the pause button. But, you know, the overall movement, it's mostly range-bound going into the end of the day, forming a slight little wedge. You could also drop a wedge with a falling top and a flat bottom. That also fits pretty well. Regardless of the way that you choose to draw it, we are getting a little bit of a range-bound scenario here, a little bit of chop going into the end of the day. The bias is obviously bull side, right? This is massively bullish. The market is looking to become a buy side only. Now, we are getting a slight pullback here, and what I would really love to see, not just a quick little one-tick trap like we had here and a double bottom like we had here. I want to see them dip underneath that, potentially even challenge these earlier lows back at around the 1291, and then find the buying support to push back up. Given the overall strength to the upside, we may not get that opportunity, but that is a location that I would love to get my hands on if the market does decide to pull back. 1292.2 is the low end of that and a potential nice buying area, but anywhere below that is kind of open game, open territory to the upside here for gold. Over on crude oil, the afternoon breaking out to the upside. We do have crude oil inventories tomorrow as per the usual Wednesday. Pretty big breakaway move, but as you can see for most of the US session, starting from about 8 o'clock until about 11:30, it went nowhere. I mean, just abysmally slow in terms of movement, and that's really the U.S. session that we had to deal with today, and it's a great example looking at on crude oil. Nice breakaway move, right? Good breakaway movement to the upside afternoon, but for the U.S. morning session, not really a whole lot to work with. Now, we are going to be closing the daily on a high, or at least very near the high. We opened up here, and we're going to be closing up here, and that is going to be one heck of a bull candle with a lot of wick at the bottom, showing potential failure. There may be a little bit of wick at the top, depending on where it does finally close. But overall, we have a lot of upside potential on that type of daily bull candle, and a lot of buyers could be looking to kind of juice this up going into tomorrow's inventories. We have an upside objective that still remains open for buyers to gun for at 48.45. If they do decide that they want to pull back and give us some slightly better entry points, 47.70, 47.56, and 47.35 are phenomenal areas, as well as weekly support coming in at 47.81. We have a nice spike up, we have a nice spike in channel, and the very common situation that you get with a spike in channel is that they come back to the channel starting point, which could be either here at weekly support or a little bit lower around that daily support at 47.56. Either way, though, we're looking to buy into a pullback. I don't want to buy this high up, so I would prefer to buy a pullback if possible to finish off the objective up at 48.45. And then finally, we've got the S&P. Now, the S&P, it did start with a bear side bias. We did have some nice bearish momentum to kick the day off, but it quickly transitioned into a range. Well, I say quickly, I guess slowly transitioned into a range and really didn't get a whole lot done. So here's 8 o'clock when we start, and then 12 o'clock right here. Aside from the nice little breakaway move that I had there, that's about all she wrote. And now we're kind of stuck in a range. So the overall range looks pretty good, drawing up the highs for a channel. They held very well, transposing that line down to the bottom, and that gives us an area of support that is coming together quite nicely. So 24, 28, 25, there's enough 20s in that number to hold me for the rest of the day, is finding an area of support to keep that bounce going. And this is also considered a slight breakdown of the potential range lows. We have a smaller range inside here. They fake break the highs, likely going to fake break the lows, and if you look, those are pretty darn close to the exact same size that it broke up in, breaking down. So a lot of equidistant movement going on here on the S&P. Overall, we are fading a low of a range, looking for a buy move back up. A couple areas of interest for the sellers to begin coming in, if they're going to try to take it, is going to be 31 3/4, 32.5, and 34 even before they start running into issues at prior day's close and the prior highs, etc. So a little bit of a range. We know what to do with a range. As always, buy low, sell high, stay out of the middle. And right now we're cycling off of the lows. So we're looking for some buying opportunities in the short term because in the long term, we obviously have a little bit more of a range-bound sentiment. And that kind of brings up another point here for the S&P. We have a very strong bullish rally higher, and notice what this is coming into as well. Almost forgot about that. We have a large channel coming off of the lows, and that's lining up with a potential channel top transposed to the bottom. We have a major area of support coming across at 28 3/4, and that is considered a kill zone. So a lot of buyers are stacking into this to try to get that move back up to fresh new highs. And tomorrow, we may be able to get back up to those 24, 39, 75s, maybe a little bit higher. We'll have to wait and see. But overall, still looking to be on the buy side, and even the bigger picture lines up with it. So that's going to be the outlook. Now, in terms of news for tomorrow, there's not a whole lot going on. The only thing for the U.S. session tomorrow is at 10:30, and that is the crude oil inventories. They are forecasted at negative 3.464 million. The previous was negative 6.428. We do have API reports coming out in about 15 minutes or so, so make sure to grab a hold of those. They tend to be a little bit more accurate. But that's really it for the U.S. session tomorrow. In the Japanese session at 1950 Eastern Time, they have the GDP quarter-over-quarter forecasted at 0.6%. The previous is 0.5%, but that's it. So in terms of big news, we have a relatively sparse calendar tomorrow, and that may lead to more slow movement if nobody wants to show up. So we'll have to play it by ear, and as always, make a plan, trade the plan, follow the rules, and we'll be A-okay. Until next time, we'll see y'all then.